Cryptocurrency space. I am your host, Piter, joined as always by Ozzy. As usual, there's a lot to get to, so let's jump right in. Please do your own research. This is not financial advice. We're going to open with Bitcoin. Interesting story with Instagram and our good friend Mark. They seem to have changed their policy around Bitcoin and cryptocurrency posts. So there are reports from multiple users that the platform is restricting posts related to digital assets, including Bitcoin. Instagram is facing massive criticism on other social media platforms like X, with people even discussing boycotting the giant. No official response from Instagram, but people are speculating as to the reason why. One is the evolving and uncertain regulatory landscape surrounding Bitcoin and cryptocurrencies right now. Instagram may be limiting discussions on Bitcoin to avoid future legal entanglements and compliance issues. And there's also there's a lot of scams. Bitcoin complexity and its rising popularity among people make a platform like Instagram fertile ground for scammers. There was an example. They have a Threads that launched in July, I believe, and there's like 100 million users that signed up for it. And in these threads, people are faking that they're a legit company in these threads and trying to pose as genuine digital asset companies and trying to scam people. So have you seen any of this going on?
I've seen some of the classic trading scams that are always going out and they're always around. I haven't seen so many of people pretending to be the legitimate companies, so that's a bit of a new thing for me. I think probably the scammers is more of the narrative that Instagram will use if they do come out with it. We saw
Because they are out there.
Yeah, they are out there, and Chase Bank in the UK was blocking crypto transactions because there were so many scams going on in the UK. So at least that was their reasoning. So if Instagram does come out with a statement, I would assume that's going to be the statement. I do know from personal experience, two of my buddies that like to use Instagram for promoting their podcasts around Bitcoin. Both say that they have seen decreased impressions and kind of hit rate of their posts in the last week or two.
Yeah, so maybe this makes Twitter even more popular?
Potentially. It all depends on how the algorithm's going and everything, but it could play a role for legitimate creators to continue to move more and more towards X.
I know we were talking about that a little bit. I mean, we post to YouTube, and it's like you put a lot of effort into building a channel, and then, we're talking about Bitcoin. I mean, we don't promote anything particularly, but we talk about the space, and if they just decide to shut it down after putting all this effort and work into it, that'd be very disappointing.
Yeah, it would be very disappointing, and I know that it's very hard for people who want to build their brand on multiple platforms to not be able to use Instagram, which is very good for reaching new users. So it's quite challenging. But
Well, we'll wait for official word from Instagram, but it does appear to be happening. But all the same, Bitcoin is just chugging right along. The Bitcoin hash rate hit a new all-time high. The 7-day average for Bitcoin mining has been climbing since January, and data shows that it hit another all-time high on the 7-day average. Just to talk about the hash rate a little bit, the mining hash rate is an indicator that keeps track of the total amount of computing power that miners have currently connected to the Bitcoin blockchain to validate the blockchain. When the value of the hash rate goes up, it means miners are bringing more machines online. And it implies that the chain validators are finding the blockchain attractive. Now, the revenues of these chain validators as a whole depends on the price of Bitcoin in USD value, as the block rewards are set in terms of the BTC value. Each block is, I think, 6.25 right now, 6.5, something right
so,
around
yeah,
there.
it's somewhere. I think it's 6.25, and it's going to 3.125 at the
So
halving.
that's the halving they talk about. So it'll go down again, get cut in half. But the interesting thing, just real quick to point out, the Bitcoin mining hash rate essentially, I thought is a good way to represent it. It's just a sign of competition. So when it's going up, it's more competitive.
Exactly. And what you'll see is as the price goes down, usually the hash rate will come down as well. But as prices start climbing again, we'll see a climbing in hash rate, usually preceding the actual climbing in price, which is super interesting. But another very interesting thing is a chart that you'll see on the screen now where the logarithmic scale of the hash rate and the log of the price will often meet and coincide at the peaks. Peak hash rate will often touch the peak price, the market price of USD on the log scale, and it could be an interesting signal for the top in each market cycle. So
Yeah,
something to watch.
personally, I hate to sell Bitcoin. Just hate it. But every once in a while, it's necessary. And you still do want to try to time the market right. But this is an interesting possible sell signal.
It could be an indicator that you could use as part of a greater kind of strategy to indicate what the top would be and a good profit taking model for sure.
Yeah,
Not
and
financial advice, obviously, but this is
no.
just a interesting indicator for everyone who might want to take advantage.
Now this hash rate rising has been happening while the price of Bitcoin has been pretty stagnant. Went up at the beginning of the year, so that kind of made sense. But for a while, it's been a little bit stagnant, and which implies just long-term conviction, in my opinion, that these miners have.
Well, I think the other piece that's happened, and I've been seeing this through different sources, is that mining equipment right now is still relatively cheap. You're talking, even new mining equipment is probably a fifth of what you were paying at the top of the market, last market cycle. And so people are getting into mining in anticipation of the halving and the increase in price that generally follows it in 2024 and 2025. This is why I say that hash kind of be preemptive in terms of people that know a lot about mining and know a lot about Bitcoin. Will preemptively buy mining equipment into into the next cycle to expand and their operation and hopefully be more profitable.
Well, speaking of expanding operations, but first, if you're enjoying the content, please like and subscribe. But we have in El Salvador an article from Forbes, the first Bitcoin mining pool from El Salvador. Volcano Energy announced a new agreement with Luxor Technologies to establish the first Bitcoin mining pool in El Salvador, calling it the Lava Pool. Pretty cool name. Being from the Big Island, there's plenty of lava out here. Sounds pretty cool. Pools are basically groups of Bitcoin miners who operate together to have their hash rate aggregated to enhance their chances of earning Bitcoin through the activity. It's like the opposite of like that nerd miner where it's like a lottery ticket. Have you seen that one?
I haven't seen that, but
Yeah, it's like a mini miner, and it's essentially like this forever lottery ticket that you could get a whole block. But Volcano Energy's chief strategy officer, Gerson Martinez, the goal of the pool is to centralize Bitcoin mining and take advantage of the regulatory clarity El Salvador has. We decided to launch one from El Salvador, the only country with the regulatory clarity and the business climate that provides stability and predictability for the Bitcoin businesses. I thought that was an interesting quote.
it's an interesting quote, and it's interesting to see something that in El Salvador, especially after the story that we had out of the prisons in Honduras, if
Yeah.
you've got if even you could afford one miner, let's say, like between you and three neighbors, they're a miner's somewhere between 2,000 and 4,000 US dollars right now. So if a community bought a singular miner potentially, right now that wouldn't be particularly profitable, but if you had 100 communities come together, they all bought one miner and then put it in this pool together, you could be having a difference. They could have a better shot at earning Bitcoin.
Or at least you would have some return on your investment. It wouldn't be zero, which is definitely possible with this nerd miner type of idea. Still fun all the same. It probably doesn't use that much energy, like a low cost. Yeah, and we also had that story last week out of Fort Worth with a city, not a mining pool, but they put a couple of miners online.
Yeah, that it was actually put in place by Lee Bratcher, a friend that I met at Permissionless. So it is definitely very cool and a very practical use of Bitcoin and
Yeah, we
Bitcoin
have to
mining.
see how they're doing after a little while.
Absolutely.
Well, we had some other interesting, speaking of interesting, a couple of ex-BlackRock directors were sitting on the panel. So on October 3rd, they had some interesting quotes about the Bitcoin ETF that everyone is anticipating as a catalyst for the next bull run here. But on October 3rd, there was a panel discussion on ETFs at CC Data's Digital Asset Summit in London. So this is, I think, on October 3rd. There was a couple of ex-BlackRock directors. We had Martin Bendel, who said the SEC, well, this is kind of like what you say, actually. He agrees with you. Martin Bendel, who said the SEC will probably, quote, the SEC will probably approve all ETF applications at the same time. I don't think they want to give anyone first mover advantage. And then this is the quote that got the big headlines. It was Stephen Schoenfield, another former BlackRock, who gave the U.S. Securities and Exchange Commission 3 to 6 months before it approves a spot Bitcoin ETF.
That's both of those are right in line with what I've been saying 3 to 6 months from now. This puts us in January, and
Right.
that is when I've been speculating a rise in Bitcoin ETFs and all of those approvals right around January 17th, I believe. And so I think we're spot on, and I think this is even more confirmation that what we've been talking about and our mentality is right in terms of our attitude. It's
Now, I
interesting
guess,
to see
oh, go ahead.
that these BlackRock directors all think they'll be approved at the same time because it shows that they don't think BlackRock is necessarily going to be quote unquote the favorite. They expect that BlackRock might lead the charge, but that it's going to be all of them at the same time. The SEC is not going to try and risk playing favorites.
I feel like if they put them all out at the same time, BlackRock will probably still lead the race with assets under. Another interesting thing in this article, the firm that he works for used to say, 9 months to him, gave like some reasoning as to why he's changed his outlook. So we have a quote here, instead of completely rejecting the whole list, recently they've asked for comments, which is a marginal but significant improvement in the dialogue. And then he also went on to say that there's also the grayscale lawsuit, which the SEC lost, which means they're most likely going to have to allow the grayscale Bitcoin trust to be converted into an ETF. So I thought that was interesting. And they also, another quick look, his company ran the numbers and believes a spot ETF approval may result in 150 to 2 billion in inflows, which would double or triple the amount of assets under management in current Bitcoin products.
I mean, I could see it. I don't see why not.
That seems pretty conservative, actually.
It,
But maybe that's actually a more accurate
I think that's a
idea.
more accurate idea. I think a lot of people are over speculating how quickly it'll have on the price of Bitcoin and the assets within Bitcoin. If you look at an example that a lot of people like to use is gold, it actually took almost 5 years, 6 years before gold saw that massive upswing in price. Everyone's saying we're going to get in Bitcoin.
To add on to that point, gold was a much better asset. I mean, Bitcoin is very novel, and a lot of asset managers have their reputations on the line. They're not necessarily going to say like, here, take this new shiny thing.
Exactly. I think that there's a lot of potential reasons why uptake won't be as right away.
Right.
I just think that the 150 to 200 billion is maybe on the conservative side, but also not totally out of the realm of possibility in terms of impacting Bitcoin and what Bitcoin really hits in this next bull run.
Yeah, it's a big number, but it's still sobering, especially for people who are really excited about this space. But I mean, these are experienced money managers we're talking about here.
Absolutely. Interestingly, Bitcoin is seeing some growth on the Bitcoin ordinal side again. After kind of hitting a pretty massive low, they've started growing, and we're continuing to see some growth despite the overall downturn in the NFT market. So this is a report from Galaxy Research and Mining, and it's their second report in the series. It said in the first 200 days of Bitcoin ordinals, there's been 1.14 million of these inscriptions. This is much faster than the first 200 days of NFTs on Ethereum, Solana, and Polygon combined. And they're expecting that by the end of 2022, it'll reach a trading volume of roughly 725 million. What I will say is that ordinals are probably benefiting from the fact that NFTs are so commonplace now. Most people within the crypto space know what an NFT is, and so ordinals might be benefiting from some of that know-how and some of that experience.
Yeah, I was kind of shocked to see that in the first 200 days, it was faster growth than Ethereum, Solana, and Polygon combined. But like you said, maybe there's just more. And people do love kind of that first mover narrative in this space. So to get involved early on, and they have some experience because of the Ethereum, Solana, and Polygon ecosystems to get involved with them. But yeah. What do they say? Trading volume, by the close of 2023, ordinals are projected to reach trading volume of 725 million. And then at the end of this report, they think by 2025 that inscriptions and ordinals will reach 4.5 billion.
Which is really interesting because trading volume on NFTs, it was 4.2 billion in September 2021 and is now 3.8 billion as of October 2023. So in monthly volume. So this isn't across all chains. So that's really, it's saying it might match the NFT market total market size of 2021. So it still isn't necessarily dominant, and considering that in the next bull market, I would expect NFTs to be at least 5 times the trading volume, probably somewhere around $15 billion in trading volume, if not more, depending on use case and what rolls out in the next 2 years. I just don't know. We'll have to see what the maturity of the inscriptions and happens and how that ecosystem matures compared to NFTs.
Yeah, because even like ESOS, because we have been kind of around the space a little bit, but getting involved with ordinals and inscriptions seems to cool. I mean, now you have like Magic Eden, where you're involved on a kind of like a major marketplace, but seeing some adoption from major would seem important. Like it's not on OpenSea yet.
Yeah, exactly. It's then just trading on OpenSea, and it does require a Bitcoin wallet, which a lot of people might have like MetaMask. Most people have a Mask, but a Bitcoin wallet, a lot of people don't have.
Right. Like, basically, what this article is saying is you're still early, and when if you're adventurous and you're still potentially early. According to this report, not financial advice.
Exactly. Heading into macro right now, there's some pretty interesting. We'll first start by acknowledging that war has broken out between Israel and Palestine, and that is actually going to be a pretty major macro player heading into the next 3 to 6 months. However long this goes on, will have a major impact on global, especially around oil, but also around, I think, other products and how monetary policy gets changed. Quick take, it could impact when the Fed pivots and could impact money printing and national debt in the U.S., depending how long or prolonged this conflict is. So keep that in mind. But in terms of other macro and more certain macro, the Bitcoin price sank about 1% after strong job numbers on Friday. Job numbers were stronger than expected, with the unemployment rate not changing at all, remaining at 3.8%. This was against expectations of a decline of towards 3.7%, and some expectations that there was going less jobs added, and we actually saw a massive number of job additions, 336,000 jobs being added in September versus forecasts of about 170,000. So that's pretty important. And we also saw August's numbers from be adjusted from 187,000 jobs to 227,000 jobs. So some pretty strong employment numbers, which suggest that the Fed will want to continue higher longer. And higher for longer is never good for anyone's bank account or Bitcoin price, because
the whole look at pivoting and waiting for this change of stance from the Fed.
Yeah. If interest rates are high, companies grow. I'm sure people were talking about a looming mortgage crisis in many parts because of potential renewal rates. The rate that your mortgage will be at is going to be much higher, which will even tighten disposable income. So there's a lot of factors that are playing a part, and the higher for longer narrative definitely impacts your wallet and will impact what you can do with BTC and what BTC will. So
yeah, I know, the next bull run, one of the narratives is, the Fed changing its stance, and this increased violence in the Middle East can't help oil prices, and oil prices are one of the big factors that influence inflation, so that remaining high. And then the job mentioned, there was a Fed chairman, Bowman. She's known as being one of the hawkish chairmen, but she supported last month's Fed decision to leave its benchmark overnight interest rate steady, and now she's raised. So now she's one of the more hawkish ones. Doesn't mean there's going to be a raise, but it just kind of falls in line with what we're saying, that there's more strength to the higher for longer, or the potential of another raise or two still being on the board.
Absolutely. Looking at the CME charts, we'll see that right now most expectations are not for a raise in currently sitting at 88.5% versus 11.5%. No one's expecting a cut, but a general shift that most people are expecting interest rates to stay the same. This has been changing pretty dramatically over the last month, with last month on September 8th expecting almost a 50% expectation of rate increases, whereas even just a day ago we were expecting about 27% forecasting a rate increase, and now that rate has been cut in half again, with, I think, the declaration of end the violence in the Middle East. If we look to December, kind of the last meeting of the year, forecasts are again coming back a little bit more conservatively, but still about a 26% expectation of a raise in December, with 74% forecasting no increase in rates. This is dropping from almost 37%, or actually 41% in just even a day ago. So pretty significant pivot in terms of expectations for rates following the outbreak of violence. That being said,
yeah, go for it.
We do have CPI and PPI coming out this week. What do you think about CPI and PPI, how that'll play a part?
Well, I mean, we know it can, and it's hard to imagine it beating expectations. It's just an important to keep an eye on. What are the expectations on them right now?
Right now, PPI month over month is expected to come in at 0.3%, down from 0.7 last month.
Ooh, wow.
So
that's a big move.
That'd be a pretty major move to the downside. Whereas CPI, core CPI is expected to come in at 0.3, which would be matching last month, and CPI is expected to come in at 0.3 as well, down from 0.6 last month. Overall, CPI year over year, though, is expected to remain unchanged, so 3.6 year over year compared to 3.7 last month, and 4.1 compared to 4.3 last month. So that's expectations. A lot of scenarios where we've beat expectations either to the upside or the downside. So I'm hesitant to see, even if we match expectations, those don't necessarily help the bull case quite yet. It just shows, because it's not a very quick decline, especially with core CPI being of regular CPI over year basis. That something that I think the Fed will want to see pivot and change before they really start looking at easing rates.
Yeah, I don't like to speculate too much on what it will do. I just kind of like to watch it versus the expectations and realize the market can move on it. Yeah, like I said, it's kind of hard for me to imagine it, just because of how wild everything is right now.
Absolutely. If you like our content, please consider liking and subscribing. It really helps the videos and helps our channel grow. So thank you. And I totally agree. It's hard to expect. We have seen gas prices drop here the last week, which was pretty.
Yeah. Let's see if
Yeah,
that can continue.
they dropped almost cents here.
Yeah, like oil. When I went, because of all the check, Brent oil, which is what I'll just kind of look at to see what's going on, and it's been coming down kind of steeply recently, but hard to imagine it being that. I mean, it popped immediately on the news, with what's going on in the Middle East, but we'll see how it plays out over the next few weeks here.
Yeah. Now looking towards the future, ETH futures were launched not only a week ago, and they have been a general flop. There's been an underwhelming amount of demand for these ETH futures ETFs, with 6 of them launching on Monday. They all hold less than 20 million in combined assets after 4 days of trading.
That is a drop in the bucket.
Especially when compared to the first Bitcoin futures ETF, which grew from 1 billion to 1 billion in assets in its first few days in the market in October of 2021. Important were different kind of market speeds and market points in the market cycle, but that's still a pretty significant difference. We're talking.
To me, I mean, it's like it's shocking, I guess. Down. ETH has been. There's been kind of a lot of negative stories lately, so I guess not shocking, but at the same time, 20 million. Yeah, it's a very surprising number.
I mean, that's 50 times less than the Bitcoin. That's like a significant difference, especially that. I mean, the crypto market's down 3 to 4x from peaks, depending on when you look at it. So this is very interesting. Matthew Siegel from Van Eck, he's their head of digital asset research, explained that at least part of the reason is the federal funds rate being at currently at 3%, which has lowered the appetite for risk assets, and with the treasury yield soaring above with the ETH staking yield, and some lackluster on, we'll talk about kind of a little bit further on, there's just a low interest at the moment. And so super interesting comments from a leading ETF provider and someone that has been on the forefront of offering digital assets so far.
On ETH, the merge and the Shanghai upgrade has led to more centralization for Ethereum. The rise in ETH staking since the merge and Shanghai upgrade comes with a cost to Ethereum as the network has become more centralized and the overall stake yield has fallen. The total staking yield has dropped from 7.3% before the Shanghai upgrade to about 5.5%. And like you just mentioned, the federal 3.3, right? And then adding that other issues. So adding to that, a concentrated number of liquidity providers or node operators, for example, Lido, the money go Lido, excuse me, could act as a single point of failure or become targets for attacks. Or they could oligopoly that would promote their own interests at the expense of the community. They also added, this was interesting, there's an added risk from the rise of this liquid staking in rehypothecation. This is when liquidity tokens are reused as collateral across numerous DeFi protocols at the same time. This rehypothecation could then result in a cascade of liquidations if a staked asset drops sharply in value or is hacked or slashed due to malicious attack or protocol entry. So they're basically saying it's not making it more secure. It's a more risky investment.
Oh, people that do this there is a massive risk in terms of compound failures, and this could have a major impact. I was reading the path, and this oligopoly doesn't really exist because Lido is a DAO, and so the community gets to vote on proposals and vote on how things get conducted. So you wouldn't necessarily be able to see that sort of piece, but the risk from the rise of liquid staking with rehypothecation is a major risk on ETH and could definitely be something that collapsed if one of these liquidity providers and liquid staking providers were to be attacked or hacked. So I do think that is a noteworthy point from JP Morgan in terms of what the potential risks are. This is, again, looking back at staking yield, has to do also with the lowest ETH gas in a long time. ETH transactions have dropped at their lowest since of 2022, back when. And so this is an interesting piece. Some have said, is this a bottom signal for ETH, or are we potentially going to see another bottom before we see a resurgence? The on-chain analyst sentiment has been observing fees this week with the value hitting 13, which is a very, very low metric. I'm used to looking at $4 to $5 on ETH up to upwards of 10. So this is a very significant drop in fees, which negatively impact the staking yield as those fees go to pay and reward stakers.
Well, yeah, there's a lot of, what's the expression? It's darkest before dawn, there's a lot of kind of negative news around ETH, but yeah, it's bottom, shines again, and you had an opportunity to buy when it was low, but yeah, hard to get excited about it right now.
Yeah, at least price-wise, we're 1580 right now. We did hit as low as 1545 earlier today, and its low is about 100. So
it's got to go for that, but we're still just kind of in this macro environment where it's hard to
Yeah.
It's easier to watch. It's easier to imagine it going down than it is to imagine it climbing out, just with all this negative news, overall macro environment, Bitcoin dominance surging, all those kind of factors.
Yeah, it dropped out of what was a holding pattern around 1800 in in mid-August and down from a low of 2100, and it does seem to be looking to form another shoulder potentially for a leg down and participate in that altcoin reckoning that could have an important impact on seeing who's the winners and losers of the next bull market. I think this macro environment is prime for a little bit of reckoning and punishing the bulls and the bears heading into the new year.
As much as it's always darkest before the dawn, it's also very to try to catch a falling knife. So careful out there.
Yeah, absolutely. On some other news, we've got the SEC being rejected on their appeal of the Ripple case. Judge Annalisa Torres shut down the SEC hope for an interlocutory appeal on Wednesday. They had filed for their appeal in early August, and they thought they were hoping to kind of clear up and remove some of the different issues related to the fact that only institutional sales were considered the sale of securities, or necessarily the sales where there was and really have an overall victory. But Torres wrote that the appeal for a stay of trial was also denied. So the against the CEO Brad Garlinghouse and Christian Lawson will move forward as previously planned. There's kind of a mixed bag of wins and losses in terms of what's going to happen, but it does seem like the Ripple case, in terms of its definition as a security, has been settled for the time being, however at a lower court. And this was a very important point that I made during the fact that it wasn't settled at the Supreme Court means that there will be more and more precedents still need to be set within the court system before we really have a true clarity on what is a security and what is not. We've seen previous judges already deny or refuse to use Judge Torres's arguments, and so we on that.
A couple other news and notes from around. Niti Kanani takes a step down. He recently announced that he would be stepping back from his day-to-day involvement with the project. This development follows Polygon Labs' recent restructuring, which took place in July. The reshuffle Boron assumed the role of CEO, and former President Ryan Watt transitioning advisory role. Arang Arjun, another co-founder of Polygon, has also left the company in March as Polygon spun off its modular blockchain project, Avail. All these announcements arrive as developers are actively involved in realizing Polygon 2.0, a project that seeks to integrate zero-knowledge proofs, and one of the most ambitious development projects for Polygon to date, honestly, and really trying to take it into the future.
Absolutely, and one of the reasons why I'm very bullish on Polygon is Polygon 2.0 upgrade. So interesting to see how the team's shifting, and I think they're preparing to be more agile and more bull market. So go for that. I hope that we do see that move and see some good news out of Polygon stepping forward. The last piece of news is that UBS has launched their first tokenized money market fund. So it follows this tokenization trend of bringing real-world assets on chain, and it also brings the money market fund, which has been growing within general users all around the world in this high interest rate environment, hoping to get better interest rates than on your mortgage account. And so UBS Asset Management, which is a management division of they're taking advantage in the Variable Company Fund, which is their first attempt at tokenized money market fund blockchain. It's using its in-house tokenization service and offering a controlled pilot of this before they move it to the general public, using a smart contract to let the firm facilitate fund and redemptions. So very interesting, and a potential real move and one of those real use cases. It could essentially be described as a yield-bearing stablecoin, depending on how they implement. So super interesting.
Yeah, the real world asset, the tokenization of real world assets. Watching how this unfolds as we go into this bull market will be interesting to watch. Well, thank you all for listening to Decentralized News. Please consider subscribing to catch the videos as soon as they drop. Our goal is to provide unfiltered content that will help the entire space grow. This is not financial advice. Me and Ozzy here are not financial advisors. The show is presented for educational and entertainment purposes only. Thank you for your support, and stay